And this from the Board of Governors and federalreserve.gov. The following statement was released by Secretary of Treasury Janet Yellen, Federal Reserve Board Chair Jerome Powell, and FDIC Chairman Martin J. Grunberg. Today we're taking decisive actions to protect the U.S. economy by strengthening public confidence in our banking system. This step will ensure that the U.S. banking system continues to perform its vital roles of protecting deposits and providing access to credit to households and businesses in a manner that promotes strong and sustainable economic growth. After receiving a recommendation from the boards of the FDIC and the Federal Reserve, and consulting with the President, Secretary Yellen approved actions enabling the FDIC to complete its resolution of Silicon Valley Bank, Santa Clara, California, in a manner that fully protects all depositors. Depositors will have access to all of their money starting Monday, March 13th. No losses associated with the resolution of Silicon Valley Bank will be borne by the taxpayer. We are also announcing a similar systemic risk exception for Signature Bank, New York, which was closed today by its state chartering authority. All depositors of this institution will be made whole, as with the resolution of Silicon Valley Bank. No losses will be borne by the taxpayer. Shareholders and certain unsecured debt holders will not be protected. Senior management has also been removed. Any losses to the Deposit Insurance Fund to support uninsured depositors will be recovered by a special assessment on banks as required by law. Finally, the Federal Reserve Board on Sunday announced it will make available additional funding to eligible depository institutions to help assure banks have the ability to meet the needs of all their depositors. The U.S. banking system remains resilient and on a solid foundation, in large part due to reforms that were made after the financial crisis that ensured better safeguards for the banking industry. Those reforms, combined with today's actions, demonstrate our commitment to take necessary steps to ensure that depositors' savings remain safe. And from TechCrunch, Silicon Valley Bank's depositors will be fully protected according to the Federal Reserve. The Federal Reserve issued a joint pair of statements on Sunday with one clear message: Silicon Valley Bank's depositors, both insured and uninsured, will receive help in a manner that will fully protect all. Depositors, the statement reads, will have access to all of their money starting Monday, March 13th. No losses associated with the resolution of Silicon Valley Bank will be borne by the taxpayer. After consulting with the boards of the Federal Reserve and the Federal Deposit Insurance, as well as a consultation with President Biden, Janet Yellen approved actions to enable the FDIC to complete its resolution of Silicon Valley Bank in a manner that fully protects all depositors, both insured and uninsured. The statement released by Yellen is prepared to address any liquidity pressures that may arise. The financing will only be made available through the creation of a new bank term funding program, which will offer 1-year long loans to banks, saving associations, and credit unions, as well as other depository institutions. There'll also be a $25 billion backstop for the BTFP, although the Reserve wrote in its statement that it doesn't anticipate that accessing that backstop will be necessary. The board's closely monitoring conditions across the financial system, and it's prepared to use its full range of tools to support households and businesses, and will take additional steps as appropriate, the statement reads. And from Bitcoinist.com, Signature Bank shuttered by regulators after SVB collapse. A major blow to crypto? In an effort to avoid the spread of the banking meltdown, authorities have announced the closure of another crypto-friendly bank, New York-based Signature Bank, dealing a severe blow to the crypto industry. State regulators pulled the plug on Signature Bank on Sunday, March 12th, the third largest failing in U.S. bank history, 2 days after the government took down Silicon Valley Bank in a failure that left billions of dollars deposited unclaimed. The potential clients of these lenders included a number of crypto firms. Signatures and Silvergate were both proponents of digital asset liquidity that facilitated swift payments between clients, exchanges, and hedge funds. In a press release issued jointly by the U.S. Treasury Department and other bank authorities, it stated that all depositors of Signature Bank and Silicon Valley Bank will be refunded in full, and no losses will be borne by the taxpayer. Signature operated a payment network known as Signet that enabled its crypto clients to make real-time dollar payments around the clock. Major companies like Coinbase joined Signet in October to enable instantaneous fund transfers for their institutional clients. Now, with Signet going up in smoke, it would have a deep impact on users' capacity to rapidly move funds into and out of exchanges, hence having a serious consequence on the crypto's liquidity. As cryptocurrency prices rose Sunday night after the federal government provided a safety net for the depositors in two banks, the event sparked uncertainty in the stablecoin market. USDC, a stablecoin created by Circle, lost its peg to the US dollar on Friday, moments after SVB entered FDIC control, as it was unclear how much of the bank's holdings were truly kept. Eventually, Circle disclosed that approximately 8% of the money supporting USDC, or $3.3 billion, were kept in SVB. For its part, Paxos Global, the issuer of the BUSD stablecoin, disclosed that it maintains $250 million at Signature Bank in addition to private deposit insurance that exceeds the cash balance. At the time of the writing, Bitcoin was trading at 22,283, down 9% in the last 24 hours, data from crypto markets tracker CoinGecko shows. And I'll open a channel here. Beam me up.
Beam me up, Mr.